Hey everyone, thanks so much for clicking on this Atlas Homes webinar. I'm David Morse.
And I'm Joe Quatrucci. We're here at Keller Williams Realty in Portland, and we're excited to spend the next few minutes talking with you about real estate.
So in tonight's webinar, we're covering three things. One, what is private money lending? Two, why is private money lending something that you should be aware of? Like, what are the actual benefits for you? And three, how do you get started as a private money lender? That's tonight's conversation in a nutshell. So let's get to it. First of all, who are we?
Who are we? So my name's Joe, as I said, and a little backstory on me. I grew up here in Portland, Maine. All my family's in the greater Portland area. I joined the Marines after high school, did 10 years on active duty. Then I decided it was time to get into real estate. Why did I want into real estate, you ask? I wanted to take control of my time. I wanted to take control of my finances, and I wanted to take control of my retirement plan. So I started in real estate here at Keller Williams just over a year ago, immediately started working with clients, buyers and sellers. I got into investing. I've done a handful of renovation projects and have dealt with hard money and private money over the past year.
And I also grew up in Maine, spent most of my life here, had to get out of this small state as quickly as possible after high school. So I moved to the Midwest, where I started my career in risk management and analysis, insurance industry. Ran a business out there for a little over 5 years before moving my family back here to Maine, where I joined Keller Williams to do some coaching and business consulting. And so now Joe and I work together investing in real estate. And I'm really excited about tonight's webinar because private money lending is how I got my foot in the door in this wonderful world of real estate investing. And so I'm excited to talk to you about the strategies that you can deploy to take advantage of this awesome opportunity. So I want to ask you a question. Have you ever earned 2 cents before? So let me tell you a little bit of a story about myself. A couple years back, I was sitting at my kitchen table, as I do customarily every month, going over our family's personal finances. And my wife and I, for several years, had worked pretty hard at saving a small nest egg away. And I'm going through bank statements, and I'm looking at the several $1,000s that we had put aside in a savings account. On that statement, I see a line item for 2 cents. 2 cents. And I ask myself, what is that? So I look over to the left, and sure enough, in the description field, I see interest earned. Over the past month, I had literally earned 2 cents on my money after spending so much of my time working super hard, stocking away as much money as I could to take care of my family. I was literally having it sit there making 2 cents every month. It was at that point in my life a few years ago that I realized there had to be a better opportunity out there. There had to be something that I could do with my money that would help give me a greater return. And it was that moment that set me down this path of real estate investing, specifically private money lending. But let's start with a big overview. Joe, there's all kinds of different types of real estate investing. So could you just give us kind of a general overview of what we mean when we say real estate investing?
Yeah, so the way that I would define real estate investing is a strategy where you purchase a property at a deep discount, a distressed property at a deep discount, and you renovate and resell that property to either a retail home buyer or a landlord. Now, the way that we're able to negotiate a deep discount is because we find properties that are distressed, or we find people, homeowners, that are in distressed situations. So an example of a distressed property would be one that the homeowner did not maintain, did not repair, did not upgrade, or do any type of maintenance to over the years, and it's just kind of weathered away. Now, a distressed owner, now that could be a variety of different things. For example, let's say that they weren't able to keep up on their mortgage payments, and now they're facing a possible foreclosure. Sometimes people inherit homes when a loved one passes away, and maybe they're out of state and they don't have a desire to resell the property or to take photos and get it prepared for a typical listing. So there's kind of a variety of different scenarios where somebody could find themselves in a situation where they just want to offload the property as quickly as possible. They don't want to deal with a real estate agent, don't want to deal with taking photos and having buyers and open houses coming through. They just want to get out of their name and the debt cleared.
Excellent. And obviously, we just touched on single family homes there. You can invest in several different arenas, office space, commercial space. There's so many different kinds of real estate investing that we can get into. Tonight, because Atlas Homes specifically focuses on residential properties, that's what a lot of our examples are going to revolve around.
Yeah.
So talk to us specifically about what private money lending is.
Sure. So private money lending is going to be a monetary loan given to an investor, and that loan will be secured by real estate. And the way that it's secured is by either a first or second mortgage or lien position. And that's your legal interest in the property, and it secures your investment as a money lender.
Excellent.
So now we're going to talk about the process a little bit of what that looks like. So the first thing that needs to happen is a company needs to identify the property that's either a distressed property or a person in a distressed situation, and they need to start negotiating with that person about buying that property. At that point, the company will find a private lender that they bring the information to around that property and say, this is our plan. This is what we think. Would you like to fund or lend the funds necessary on this deal? From there, the lender receives the documents, which will secure the loan. And we'll go over those a little bit more in detail here in a bit. The home is purchased. The home is renovated. Then the home is resold for a profit. The lender at that point receives their entire principal plus interest back. And then, of course, we repeat the process over and over again.
Awesome. So let's talk real numbers. Let's get into an example here. So if I'm you out there and I'm thinking about lending money, what does this actually look like as far as benefits to you? If I have a certain amount of capital multiplied by a certain interest rate, what does this actually look like when it comes to your capital? Well, let's talk specifically about a 6-month loan secured by real estate. Here we give you just a couple of examples of capital that you could invest. Perhaps you have 25,000, 50,000, 75,000, could be much more, but these are good round numbers to start with. A typical private lender should expect to see anywhere between 8 and 12% on money, depending on how much of the deal they are funding and the relationship that they have with the investment company. For round numbers, we're going to utilize 10% interest as a rate of return. What does that look like on a 6-month basis? Well, if you were to invest $25,000 at 10% over a 6-month period, that's going to result and yield you $1,250 in profit. $50,000, $2,500 in profit, and $75,000, $3,750 in profit. You can see how the numbers work there. Essentially, we take the 10% return over a year's period, we divide that by 12 for the months in a year, and we multiply it by the number of months that the investment is held.
That sure beats your 2 cents from earlier, David.
That certainly does. And that's really why I got excited a few years back when I discovered this. Let's talk about the same capital in a high yield bank CD, or certificate of deposit, a popular financial vehicle because of the safety involved. Let's take those same numbers, 25, 50, 75,000. I checked with my bank, a local bank here, just before recording this to say, what are the interest rates on your CDs? And the banker got very excited and she said, well, we have some great rates right now. That rate was 0.85%, less than 1% on my money. What does that look like over that same 6-month period? Well, you can see here that the profit for me on my money is going to be anywhere between $100 and $318 in this scenario. So already we're at just on $25,000, we're at an $1,100 deficit in 6 months by putting my money in a certificate of deposit.
You're quite literally making 10 times the profit utilizing real estate as an investment strategy than you are in this CD.
Exactly. And we're going to talk about some of the ways that you are protected and how you can utilize this strategy to compound your money. Let's talk about the same capital in a 401k, an IRA, some other type of investment that's pretty much solely tied to the stock market. We have these 25,000, 50, and 75 again. According to the Vanguard prediction, now this is a prediction, no one can guarantee the performance of the stock market. Vanguard is saying that the average return in the market over the next 20 years is going to be approximately 6.76%. And this is pretty much proven true over the course of history if we look back. So we multiply this by 6.76, and the profit looks a little bit better than the certificate of deposit, of course, $845 all the way up to $2,500. Now, at the same time, like I said, this is a prediction, and you have no control over what your money specifically is going into. Stocks are pretty much something that you have no control over. And when we look at the profit, you're already at on a 6-month basis, just on $25,000, missing out on roughly $300 in profits.
Yeah, and I think the other important thing to note on this particular slide is that there are management costs associated with the 6%. When you put your money in a mutual fund with Vanguard, now I'm not picking on them and I don't know how much they charge specifically, but I can guarantee you there's some type of management fee, cost of doing business with their company, whereas that's all typically avoided in real estate depending on the structure that you have set up.
Exactly. And as a private market lender, you have some control over structuring exactly what you want to get into.
That's exactly right.
Excellent. So let's specifically dive into some of the benefits of private money lending, of becoming a private money lender.
Yeah, so that stock market comparison, that's a great time to kind of dig into that a little bit more. As we said, a stock market is a completely unsecured, uninsured investment that you don't really have any control over. Not to mention there's nothing tangible about it. You can't touch it, you can't see it, you can't feel it. You typically don't know anything about the wide variety of companies that you're invested in or even the categories of investment that you're in. There's a lot of variables and unknowns in the stock market.
And I'm going to stop you right there because that's one primary reason why I got into real estate as well. And I'm sure that's similar for a lot of people, is the stock market is kind of confusing.
Yeah, absolutely.
I'm not a really smart guy, and the things associated with that take a lot of work. I can see a house. I can see a house getting rehabbed and returning higher value.
Right. Now let's take a look at the real estate side of the house. Real estate is secured by a mortgage. It's collateralized and fully insured. We collateralize it below market value. That's going back to distressed properties and distressed situations. We're buying it at a deep discount right from the beginning, and then we're basing our after repair value, our resale price, based on market data. The returns are fixed when you're investing hard money on a real estate deal, meaning up front, I'm going to make 8%, 12%, somewhere in between that range, in the terms are set. So 6 months, 9 months, 12 months. So you know exactly after what amount of time you're going to make what percentage return on your investment. And of course, it's a tangible asset. You can go see it, touch it, feel it, walk inside it if you want to. So you know that there's something there. It's a real piece of property, hence the name real estate.
Excellent. So these are some wonderful benefits. How do you protect yourself? I think it's important that we talk about this because as a private money lender, as you're getting into this, you shouldn't just be throwing your money at anyone that comes your way, asking you to get into a deal.
Right.
It is your responsibility to protect yourself by vetting both the investors that are coming to you and the investment company and deals specifically on an individual basis that they're bringing you. So talk to us a little bit about how private money lenders can protect themselves and about the built-in protection that is just comes as part of the process.
Yeah, absolutely. So we'll go here to the next slide. So what happens is the lender in this scenario, their funds don't actually go to the company themselves. The lender transfers their funds, their investment funds, to the title company. What they get back from the title company in return is a legal real estate attorney. They're going to get back finalized closing documents. Those documents are going to include that mortgage that we talked about and a promissory note, which is going to guarantee the lender, that's their security, that they do in fact not own the property. However, they have a claim in the property, meaning that the owners, the real estate company in this case, cannot resell the property with first paying off that debt. The lender's going to receive, there it is, a promissory note, a copy of the mortgage, and the insurance policy, of course. It's important as the lender to be on the insurance policy in case there's any accidents. Disasters happen, fires happen, incidents take place. And so if you have any amount of money or skin in the game on any particular investment property, you want to make sure that money is protected by insurance. And so part of what any legitimate real estate investing company should be doing is adding you to their insurance policy
as a loss payee.
As a loss payee, yes, that's
excellent. Right. Awesome. So I know you're all chomping at the bit here to figure out how you actually get started. How do I start as a private money lender? Well, let me talk to you a little bit about some common funding sources, because obviously if you're going to get into this, you need some capital. So how can you come up with that capital? Well, first and foremost, cash. Where do you have cash sitting around? Maybe a savings account, maybe a checking account. Maybe your mom, your dad owes you money from when you were younger. Whatever the case is, if you have cash available to you, that cash can be brought into a real estate deal. A home equity line of credit. This is a very popular source of funding real estate deals. Let me explain this one a little bit. So if you have lived in your home for a long time, you have built up a substantial amount of equity in your home, you can actually go to the bank and open up what's called a home equity line of credit. What you are essentially doing is borrowing at a very low interest rate against the equity that you have in your home. So right now, in a lot of places, you can get a home equity line of credit for 3, 4, 5%. You then take that money into a real estate deal where you're earning 8, 9, 10, upwards of 12% even in some cases. And you can see how even the difference in interest that you're earning in the deal versus interest that you're paying on your home equity line of credit can yield you a substantial amount of profit.
Yeah, that's huge, David. And a lot of people don't utilize their home equity line of credit because they're not sure how it works. When you have this amount of equity just sitting in your house, let's say you have $100,000 in equity, meaning maybe you owe $200,000 and its fair market value is $300,000, and you have that $100,000 of equity. It's just sitting there, and we call that dead money because you're not making any money off it. That money's not working for you. It's just kind of exists. And so when you go to that bank and get that line of credit, as you just said, even if you're just making the difference, if you borrowed at 4% and lent at 10%, you're now making 6% on $100,000 versus 0% on anything.
Definitely. And I love that you said dead money there. I hear a lot of times in real estate, as we're working with agents who are working with buyers and sellers, and this is a little bit off a little bit of a rabbit trail here, but I think it's important. Common thinking says when I move into a new home, I sell my home so that I have the down payment necessary for my new home. Well, think about the home equity line of credit as a tool to help you build your real estate portfolio. What if you took equity out of your home, kept your current home to help you get into your next home? Something to think about, something that we'll probably do a webinar on.
Another great strategy, absolutely.
Personal and business lines of credit work much the same way. Perhaps you open a personal line of credit, or you have a business that has operated successfully, and as a result, the bank has given you a line of credit. It's going to work much the same way. Bring that capital into the deal. Retirement accounts. So these are your 401ks, your IRAs. If you're self-employed, perhaps a solo 401k or an SEP. If you have a self-directed retirement account, which we can point you to resources to help you get set up that way, you can actually use your retirement account and all of the tax advantages of them to get into specific real estate deals. And a lot of people don't realize this because they have someone managing their retirement accounts for them. They don't know that they can allocate specific money into specific places. And so self-directed retirement accounts can become a very, very powerful tool. And finally, liquidated securities investments. So perhaps you're in the market and you liquidate some of those investments, those stock holdings and positions, to take that capital and get into real estate. So those are the 5 most common funding sources to bring capital to a deal. So at this point, we've gone over a lot of information, and we would love the opportunity to answer any questions that you have. And so reach out to us at atlasholmesgroup@gmail.com, or personally to myself at davidmorse@kw.com, or Joe Quattrucci
at Quattrucci@kw.com. Even better yet, guys, send a personal message, a DM on Facebook, comments below, Instagram, whatever the easiest way is to get in touch with us. Go ahead and ask us for questions you have. If you're thinking a question, then somebody else is probably thinking the same question. So don't be shy. Go ahead and reach out. We'll be happy to walk you through any parts of this process that you're not clear about.
Awesome. And finally, just a few resources. If you have now, if we've whet your appetite for learning more about this, let me point you in the direction of some resources. We have a financial calculator there, a specific book on real estate note investing that's going to dive a little bit deeper into what we've talked about. Self-directed IRAs, both of those companies are trusted companies. And of course, private lending opportunities, atlasholmesgroup@gmail.com, as we said. Thank you so much for joining us on tonight's webinar. We look forward to hearing from you and learning more about your success as you jump into private money lending on real estate deals.